Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're going to spend the next few minutes looking at the crude oil futures using the CL2. We're going to do some Elliott wave analysis and we're going to do some classical analysis. So let's get started first with the classical analysis. I want to start with that today because before we get into the specifics of what we think we're looking at here, let's just look at the overall picture for a minute. Let's bring up a few bits and bobs here to help us do that. I'm going to need a fib retracement. Let's bring up our moving averages as well. Volume at the low here. Come out to the daily time frame. Okay, so basically, my count supports the idea that we completed a larger wave degree up here. And that this is a larger wave degree correction, and all of these are smaller degree corrections within it. Okay, so we're now looking for a more significant pullback. And it could be complete already, A, B, C, and bouncing from here, right? But it's a very deep correction down here for it to be a 1-2. We'll talk about that later. But either way, my longer term picture is we're likely to still come down a bit lower to find some more significant support before completing a larger wave degree and then pushing higher. And that is the long-term idea, which is we had a cyclical completion of the bear market down here in April 20, and we're now into a new cyclical bull market going considerably higher in the coming decades, with a oil price going way beyond previous highs. But this is going to take a very, very long time, so it's not going to happen overnight. So we've got these support resistance levels, local resistance around the previous highs here, and these lows here is around 97.05. Any counter trend move which takes us through this could be corrective to this larger move down so far before pushing lower, or it could be sign that the price is bottom. We would wait to see some kind of impulsive wave out of here to have an idea that it was bullish. Below that, we've got price supports at the resistance of this high back here in October 21, which was 83.83. We then have a strong support level here with support on the shorter time frame, resistance on the longer time frame, and resistance back here as well in July 21. That's 75.83. And then we have a very, very strong support level, which is a previous high, previous resistance, previous resistance, previous support, previous support, previous resistance, previous support, here at 66.61. In this major demand zone where we can see between the 50 Fibonacci retracement level and the golden zone here, 61.8 and 65. We have this little spike in the volume profile here, and this is our major area of demand here where we've come up in a move here where we've got quite thin trading in this initial move, and we've pulled back, found buyers, moved up, pulled back, found buyers, moved up, pulled back, found buyers, overlap, overlap, overlap. Strong demand here, stepping up with higher lows, and then we rocket into this high here. So coming back into this region from a classical analysis point of view seems to make sense. If we look at our indicators for a moment, we can see how in the approach to the recent low over the last few weeks, we've seen a rise in bullish divergence on the MACD and the RSI, suggesting that we are bottoming in the short term at least. So I feel that some kind of counter trend move is being suggested by this rising divergence before continuing lower. We may have seen it with this small rally, but that seems a little too small in my opinion, but we'll have to go with what we see as it happens. Regarding our exponential moving averages, we're trading around the 250 exponential moving average, which is the green line here. We have traded below it before. We have broken it recently, and currently our daily candle is still trading below it. We've come up to the 60 exponential moving average in the meantime and found resistance at this level here. The 60 exponential moving average coming down to these prior highs and projecting this little piece of resistance as well. So just bring on our longer term VRVP, we can see we've got a long-term point of control from our fixed volume profile here and our visible range volume profile, taking in prior price data of this area down here. This is before all this thin trading and this jump higher. So yes, it's possible that we come even lower than the 61.8 and the 65 and we seek out lower targets. That's also possible. Big wave 2 could be very deep. If we just remove some of the visible range there for a moment and take in everything from below, we can see how that's our point of control shifts up to this area here. So this is around a support level and around this demand zone. So it's very much about how much previous price data you include, but we're still bottom heavy with our point of control. All of this trading, even this overlapping trading up here, has yet to bring about a top heavy point of control. So if we are trading downwards from here, we could come a long way back. So if we just change this to the wave 2 for a moment, we can see that that point of control is overlapping perfectly this blue line. This is the 78.6% retracement for a deeper wave 2, and then you've got a bit of a gap in the volume profile here, a bit more thin trading until you get down to a little bit of demand right down here at the bottom at 89%. So if this is a primary wave 1, we've got the potential of coming all the way back to the prior lows of April 2020, just not beyond them. I suspect, however, that the most likely area of support will be in this demand zone between the 50 Fibonacci retracement and the 61.8. So that's essentially how I see the short-term classical analysis. Like I said, we've got this rising divergence here. We've got to keep an eye on, see if we get a bounce sometime soon. So that's that covered. Now let's come in and have a look at our primary count. I'm still working on an alternate count, which is some kind of bearish explanation, but I am genuinely struggling to find a true alternative at the moment. I don't think you always have to find a true alternative. You should endeavour to do so. It's just good practice. But sometimes the bottom's the bottom, you know, and essentially the futures went to zero. As well, futures traded into negative territory actually, and the WTI literally went to zero. So how bearish can we really be over the long term? Intermediate term, so potentially significant retracement. Longer term, I see higher highs in the years and decades to come. So let's now bring up the primary count. On that note, as I mentioned, if we take a moment to actually measure this, we can see we've got 183 days. Now, assuming this is a flat pattern and this is a sharp pattern, we can see that it is significantly larger than that correction and significantly larger than that correction. And if we take any of these as individual corrections, potentially, this is much, much bigger. So my hunch that this is the completion of something larger up here rather than the extension of something that's already occurred, I feel that's a better fit. Okay, that this is a bigger correction and we're not done yet. So on that note, let's come into the 8 hour. Actually, come into the 4 hour for a minute and we'll have a look at how I've interpreted this. So I'm not 100% happy with how this looks, to be absolutely honest with you. I'm looking at this is okay and this is okay. This, however, a little sketchy. Let me explain why. So this move from the high looks to me like 5 down, 3 up and 5 down again. It looks like a zigzag. From there we go into a zigzag, into a zigzag, into a zigzag, into a zigzag. So this now counts from a subwave perspective very much like a ending diagonal. It could be a leading diagonal made of threes. They are still more common than the 5-3, 5-3, 5 variety in anyway. So we've got a diagonal, but it's a very long wave 1, shorter wave 2, 3 is shorter than the 1, 4 is smaller than the 2, 5 is smaller than the 3. It fits all of the rules for a diagonal. It's just a little peculiar looking, you know. You would expect to see a genuinely, you know, a more extended wedge rather than it all being compressed into this little group here. But it's still a legit diagonal. So in this case, we would be looking at it as a leading diagonal, with this being a zigzag, this being a free wave flat into a C for the X, into a Y wave, which would be comprised of a diagonal, some kind of free wave move. It could be this tiny little move here as to be. I have my doubts, so I'm suspecting something more like this, and then another zigzag down. Oh, sorry, another 5 waves down, excuse me, into a larger zigzag. So this here is the larger zigzag, I should say, and this C wave will be comprised of 5 waves. It could be an ending diagonal, but less likely after leading with a diagonal, so more likely to get an impulse here down in the C wave. And that's basically how I'm looking at it as the primary at the moment. But we must be aware that the divergence does fit the idea of a leading diagonal. Leading diagonals start strong, or diagonal patterns start strong, tend to, in a contracting pattern, and then they significantly weaker. That's why the waves get smaller over time. So the bearish momentum is dying off as the pattern completes, and that should lead to a pop in the opposite direction, often a very deep one. Now, as you can see, not much yet. If we've come up to here and now we're going down again, that was a very brief B wave, so I find that a little difficult to believe. I'm not saying it's impossible, it just doesn't fit very well. I would more likely expect to see something like 5 into A, B and C perhaps, and then we get a much more extensive Y wave, which is expanded much bigger. That's one way of looking at it, or it could just be a simple 3-wave move from here to here to here, and then we come down in an extra zigzag. So that's one way of looking at it, and that will bring us down into all this price support, resistance and supply and demand area. Okay, the only alternate count I've got in the meantime is to look at it as a complete ABC. Okay, so we've got the same diagonal into here, like so, and then we've gone A 5 waves this time. You can see it clearer in the line chart. A very small wave 1 at the top here, 3, 4 and 5, so that becomes 5. This is that 3-wave swing into B. This is not a flat ABC, this is still a zigzag. 5 here, 3 here, 5 here. The reason it's not a flat, the B does not retrace 90%. Okay, if we just take a quick look, we can see that we only make it to the 78.6. Now, I go by the Elliott wave principle, the EWP, the original source material for Elliott wave rules, which states a 90% retracement is expected. I'll give the benefit of a doubt at the 89% fib number, as it is a Fibonacci number, so if I say 89%, I'll say that's 90. But I won't accept 78.6% as a flat, even though I know some source material suggests that you can. It's just one of those things the community is a little divided on. But either way, one thing has to happen now. If this is ABC complete, we get roughly a 1-to-1 extension. So a nice relationship for a zigzag. 1-to-1 around these lows, right? Something that zigzags tend towards parity. They don't have to finish at parity, they just tend towards it. Now, the WXY doesn't care about that at all. It doesn't have to have as close a relationship as any individual ABC. Any individual simple zigzag is going to have a stronger relationship. When we're talking about two separate zigzags joined together, one could be very short and brief, one could be very big and expansive. They could be similar in size, they could be completely different in size, but either way, that one-to-one relationship not as important. Here, it matters a little bit more because it's more likely to occur. Now, however, we are right at the invalidation point. 85.48. If we break this level here, then this can't be 1 and 2, 3, 4, 5, starting a new wave up. Okay, that's incorrect at this point. So it wasn't complete. It wasn't A, B, C. At that point, I think sticking with the primary seems to make the most sense at the moment, and therefore that is what will continue to support the idea that we've got a primary count here, and we've got W, X, and Y. And that really, guys, that really does sum up what we're looking at the moment. There isn't much more to talk about. We could look at the shorter term areas of support here, but we know longer term we've got all these levels below us anyway, and of course they tend to sync up with these little areas of demand as we pull back into them, including this lower support here. So it's we can throw a fixed range volume profile up and see how that looks off of this impulse. Assuming that this is a three-way swing to a non-expansive high here. We're saying zigzags, remember, not a flat. It's deep, but it's not a sideways correction, it's a sharp. Point of control is roughly around where we are. That's slowing us down somewhat as well. Then we've got these little areas around these price support levels. So still watching these prices, see what we do if we come back in. If we rocket out of here, 1 and 2. If we collapse, then it's either B wave complete very briefly, and 5 waves down lower into the Y wave, into the C of the Y of the 2, or we could be looking at, as I suggested earlier, A's done, B will actually be A, B, C, something expansive. This will be the B, and then we'll come down here in 5. Okay, so just keep an eye on it. We've got that divergence coming into these lows, higher lows on the RSI and the MACD, lower lows in price. This, to me, does not seem sufficient enough for such a divergence on the day level, but it could be. It could be. I just feel like we should be getting a little bit more. That's all really. Okay, so and that's really all I've got for you at the moment, guys. Like I said, I don't really have a bearish interpretation as what would a bearish interpretation be. I'm simply calling for a correction, right? It could be a significant correction. It could be very, very deep. Okay, but it's going to take us way, way higher in the long term. So it is a bullish interpretation. Any bearish interpretation in my book would have to lead us back to and beyond zero, and I can't really see a way of not when I take my long-term count into account. I can't really see a way of interpreting that, to be absolutely honest. I think we are in a new bull market. We are in the first primary 2 of that bull market, I think, and it's either done or we've got further to go into the end of the year. Okay, and perhaps even beyond, because let's just leave you with this then. If this is a free, and this is a free, and this is a free, that will be a complete correction. But what if the other idea that I had here, 5, 3, 5, is A, B, C into, oh, hang on, excuse me, into W. You see? Then you'll have an X, and then you'll have a Y. So it could be a much more significant correction, 1, 2, like this. We don't know that's going to be the case, and we're not going to start entertaining that idea until we see some price data to support it. In the meantime, a correction on this scale, WXY, is more than sufficient, I think. Right, there's your quick update for oil. I'm going to try and be a little briefer with these videos now that the summer holidays over and kids are back at school. I'm going to try and get more stuff out on YouTube as well as for my patrons as well, and we're going to try and keep it a little briefer. So thank you for joining me on this technical analysis of the crude oil futures. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. I recently just put out a video on the TLT, which is the 20-year Treasury ETF. Which you might find interesting, but there's a whole bunch of educational materials and things as well. You go over, have a read, see if you're interested, and if you're not following me on Twitter yet, please do so. There's a link in the description box below. Alright guys, take care of yourselves, all the best, I'll be back with you soon. Take care, bye bye.